Hey everyone, it's Rob Folia, Folia Properties and author of Real Estate Reset. And I'm coming to you today because it's the first of June. Well, I guess it's actually the first weekday of June. And that means we are going to jump in and take a look at some market stats. We're going to see how the market's treated us over the last 30 days and see how things are trending for the next 30 days. And really, honestly, since we're about to be halfway through June, we can maybe start to get a guess of how things are going to trend for the end of 2024. So without further ado, let's just dive right in. Before we even look at local market stats, let's start with interest rates. Since it has been a month since I have done a market update video, let's just see what rates have done in the last 30 days or so. You can see the week ending May 2nd, Thursday, May 2nd, so about a month ago because it's June 3rd today. Rates were 7.25, 7.22%. You can see they dropped a little bit into the very, very high sixes, basically 7%. So they went down about a quarter of a point. But they're still back up into the sevens for last week ending on May 30th. When I'm seeing this trend, it's really telling me that rates have normalized this year around that low sevens. I mean, when we see 7.03 here on Freddie Mac, typically that means even if you have perfect credit, amazing credit, 20% down, conventional buyer, most lenders are still going to be in the low sevens somewhere, maybe 7.25 or somewhere in that range. It's just kind of how things are when it comes to mortgage rates. And so, that's telling me that things have just kind of normalized where you see them right here. I wouldn't expect them to drop. I wouldn't expect them to go down much. I wouldn't expect them to rise a ton right now either. Now, that said, your guess is as good as mine. We could have this talk in 30 days. Rates could be 8%. They could be 6%. Nobody knows. Nobody saw this hike last year happening to where rates became almost 7, just like nobody saw them dropping from where they were in 2018 at almost 5%, down to 2 years later, 2.5 years later, being below 3. So I mean, any quote unquote expert out there that tries to tell you they know what rates are going to do, they're blowing smoke. It just is what it is. But right now interest rates are in the low sevens. Take advantage of that if you if you're in a position to. The reality is, if rates were to rise, if they were to go to 8%, 9%, whatever it might be, that makes that mortgage less affordable for you as a home buyer. And if you're selling, it makes your home less affordable for most home buyers because if they're financing, well, that payment has just gone up. And so it's just something to keep in mind. And before you start saying, well, Rob, if rates go up, doesn't that mean prices are going to go down? Let's take a look. I've just pulled up a market snapshot for Davidson County, and it's just it's just analyzing May of this year to May of last year. And you can see right here, rates 12 months ago, the last number to let me look at, June 1st of last year, 6.79, quarter of a percent higher today, roughly, so very similar. And you can see right here, what if prices, let's take a look at prices. Prices have gone up 6% on average. The median sales price has gone up 7. New listings are down 8%, from 1,300 plus last year to just a little above 1,200 this year. And that's because there are less people who are putting their house on the market. It just is what it is because of what interest rates are doing. The interesting thing to me, what I'm seeing too, is that months of supply is starting to inch closer to that point of equilibrium. 5 to 7 months of supply is considered a balanced market. Obviously, we're still off of that. We're still in a solid seller's market at 3 1/3 months. And yet the reality is when we see this trend of May from 22 to 23 to 24, and remember, May of 22, just look at rates from 2 years ago. May of 22, right here, it was fine. May of 22, 5.27. It had been rising. So like people were jumping on a 5.25 rate because just 6 months prior they were getting 2 and 3/4, 3%, whatever it might be. And so they were jumping on this rate, buying a house, paying as much as they could to buy that house and lock in at that rate, because that's what they saw the trend was rates were rising. So again, months of supply was insanely low 2 years ago, and it's starting to get back to normal. Just to take a look and show that this isn't just a Davidson County trend, we'll pull up, say, Rutherford County here as well and run the same exact report. And you can see new listings down 10%. It's a continued trend year over year over year. Medians, average sales price, it's only up 1%. It's still up, still holding strong and still up. Whereas the median sales price is up 5%. months of supply, that's still very low. Still basically where it was last year. You know, it's up from 22, but again, 22 was an anomaly. This is still an extreme seller's market in Rutherford County, just as long as a home is priced right. I mean, that's just the reality of every market, really. If a home is priced right, it's going to sell. So what does all this mean? I basically wanted to just jump into this real quick and let y'all know that the market is very much holding firm to where what we've seen over the first 6 months of the year. This tells me if you're wanting to buy, if you're wanting to move, you've got to look at your exact scenario, and I can help you with that. Obviously, and I here, let me stop sharing my screen so I can just talk to y'all without a bunch of stats, since we're not going to be since we're not looking at any numbers right here. You know, I can definitely help you if there's anything that you want to look at. You know, in fact, I was talking with a friend of mine the other day who was wanting to get into a different school system, you know, and they just bought a few years ago, so they don't have a ton of equity in the home, you know, but they have seen some appreciation. And their scenario is going to be different from somebody who, say, has been in a home for 20 years and has a ton of equity. You know, but maybe the person in their 20 years never refinanced. They still have a 5 or 6% rate, and it's not much of a difference between that and a 7% rate. Whereas the person who bought 3 years ago has a 3% rate, and it's a huge difference between that and the 7% rate they might get today. Point being, everybody's scenario is going to be different. So if you're thinking at all about moving, I do encourage you to at least get the information on what things look like today, because that's going to help you make the right decision. Get that information, reach out to me. We'll sit down. You know me. It's a no hassle, no commitment type of meeting. I just want to inform y'all and see if there's any way that I can be of service, and see if it's in your best interest to make this move. So give me a shout if there's anything I can do to help. If you're seeing this in your email and you have a question, just hit reply. If you're getting this on social media or on YouTube, hit that like button if you don't mind. Make sure you hit follow or subscribe, whatever it is on whatever channel you're looking at, and drop a comment as well. I'd love to know that you're watching these. But thank you so much for checking this out. Again, I'm always here to help. No question too big or too small. Happy to answer them all. Appreciate y'all checking out this short video this month, and we'll see you soon.